Welcome to my 2022 mid-year market report. And I don't want to pat myself on the back early, but I remembered how to tie a tie on the first try. I have a lot to say about the current state of affairs, including what I'm planning on doing with my own investments, but I won't bury the lead here. I really have no idea what's going to happen in the short to medium term. And while you shouldn't take advice from a guy sitting in front of a bookshelf, although he does have a very nice tie on, I've got the majority of my net worth directly invested in industrial real estate, and I study the industry at nerd level 10. So in this video, I'll share with you the macro level themes as well as some micro level topics you'll want to explore in your specific market. These are the forces that propelled the market forward and even threatened to pull it back. First, we need to acknowledge that a rising tide raises all boats. Following the onset of the pandemic, governments and central banks all over the world advanced aggressive stimulus packages combined with unprecedented money printing. In the US alone, the money supply increased a staggering $5.5 trillion from December 2019 to August 2021 alone. This amounted to a 35% increase in the money supply in only a year and a half. And while it's scary to think what would have happened to the economy were it not for this ridiculously expensive intervention, we need to wean off this fake and artificially propped up economy and come back to reality. Closely related to the money being injected into the system were historically low interest rates. For the businesses and consumers who didn't get enough free money from the government, they could take on debt to fund virtually anything else they felt they needed. In retrospect, nobody should be surprised that we're now facing problematic inflation.
Holy cow, things are so much more out of control than we thought.
Second, e-commerce has taken away market share away from the brick and mortar retailers for the past 2 decades, and this trend was greatly accelerated over the pandemic. This necessitated the need for considerably more warehouse space, resulting in ultra-low vacancy rates as developers race to add new inventory. Naturally, rental rates will rise anytime there's greater demand than there is supply. Third, supply chain issues all over the world caused a number of companies to increase their safety stock, which in turn also required more warehouse space. So the government injected a ton of fresh money into the economy. At the same time, consumers sped up their adoption of e-commerce, and at the same time, the companies increased inventory to avoid running out of stock. These 3 factors explain why the industrial real estate market soared all over the world, but there are also some micro factors that cause some markets to outperform the rest. For example, port markets have done exceptionally well as markets that have had high immigration. One of the main drivers I'd look for in a market is population growth. If more people are coming to a particular market, this should result in more consumer spending, more economic activity, and more demand for warehouse space by extension. There were other smaller factors, of course, but I believe these were the main forces behind the crazy amount of growth we saw in the industrial market. But now we're facing new challenges in the form of rising interest rates, inflation, and a looming recession. To combat the inflation, central banks are adopting an interest rate policy intentionally designed to cool the economy down. Do interest rates need to rise even higher to tame inflation? Possibly. Would rising interest rates put a significant strain on the economy? Sure. Could we be going into a painful recession? I think that's been a constant risk my entire career. I've heard numerous people tell me that all along. But if you asked me what would have happened when the economy had to slam on the brakes in March of 2020, I would have had many dire predictions, not one of which would have led to industrial real estate going through a crazy boom for the next 2 years. Both inflation and rising interest rates pose problems of their own, but I'm a fervent believer that there's no single policy change, world event, or economic force that exists in a vacuum. The economy is far too complex for any of these forces to function as a lever when pulling on one of them affects something on a direct proportion on the other side. Stated another way, nobody can make reliable forecasts given the infinite amount of scenarios that can unfold. Here's what I do know though. The largest industrial property owner in the world, Prologis, just paid a premium to acquire 160 million square feet of warehouse and distribution space. A company of that size has surely made some educated guesses on what will happen in the short term, but I also believe they're not overly concerned about the short term. Instead, they're making these decisions for the long-term prospects of the company. And here are a couple of interesting stats about the portfolio of properties they're buying. Only 2% of their debt matures through 2025, and less than 1% of that exposure is to variable rate debt. Even outside of Prologis, recent statistics also show how hot 2022 started, with quarter-over-quarter growth for Q1 increasing 7%, the highest quarterly increase in over 20 years. Another thing that comes from the past 2 years is a collective realization that warehouses form an integral part of the global supply chain. While industrial traditionally worked out of the spotlight, is now being recognized by many more investors, from small local investors all the way up to large institutional investors. On the interest rate front, while they're approaching 2008 levels, in a historical context, they still appear to be a long way away from the levels that past investors were challenged with. It's purely speculative on my part, but I feel having a bit of a buffer in there allows the federal banks to lower the rates down the road when they feel the economy needs stimulating again. Ultimately, I do think we'll see some downward pressure on the economy, and the mainstream media will go out of their way to fan the flames of fear and despair. So perhaps we see months or even years of a depressed economy, but I remain very optimistic about the industrial real estate market in the long run. The reason I study this market so extensively is that I believe being aware of the news, trends, developments, and overall market sentiment can provide a slight edge. It's not a get-rich scheme business. Instead, it's a business where patient and industrious investors can study everything they can about the market and get wealthy over time. I started writing a weekly newsletter where I share everything that I'm reading, both good and bad, in order to help others stay ahead of the competition. There might be a bit of overlap between the articles and these videos, but the only way to read the full article is to subscribe. It's free, and you can unsubscribe anytime if you're not getting any value. Just head over to industrialinsiders.com to sign up. Thanks for watching. Catch you in the next video. In retrospect, nobody should be over the world increased. Sure, scroll up a bit. Markets have had high immigration. I can't wrap my head around how to fix that error.